Welcome to this video. In this video I'll be showing you how to set up your indicator on your charts, that's on your trading platform, that's MT5, MetaTrader 5. So let's go to the app here. So this is how the trading platform is. This is how the app looks like, and in this app, this is where you do your trading. You see the charts. So how to set up your indicator is this: you come to this place, this symbol showing F here, this symbol, you click on that symbol. Once you click on it, you can see there are so many indicators. We have different types of indicators. We have the trend indicators, we have the oscillators, and if you go down, you see we have the volumes, we have the volume indicators, and we have the Bill Williams indicators. So, but for the strategy I told you about, is going to be you are going to be setting up the bonus indicator that I gave you. You are going to be using trend indicators and oscillators. So for the trend indicator, the first one you are going to set up is your moving average. Look at your moving average here. You're going to set up your moving average. That's that indicator here. Now you click on it. Once you click on it, you can see it is showing moving average here. So it shows this is moving average you are setting up. And then the period, remember the setup I gave you was EMA 50. That's exponential moving average 50. So you are going to change this period here. You change the period to 50. You change the period to 50. Then the method, remember it is exponential, not simple. So this method here, that's this one, you change it from here, simple, you change it to exponential. So you click on simple, then you can see exponential. You can see exponential here. So you click on exponential. Once you click on exponential, always apply to close. Apply to close simply means it is going to work on the close at the point where the market, the candlesticks closed, and that's what you want. So you apply to close. Then the pixel simply means how thick do you want the line to look, the trend line to look, your exponential moving average, how thick do you want it to look. You can adjust the pixel to what you want. There's 1, there's 2, there's 3, there's 4. So but I chose 3 so that I want it to be a little bit thick. Once you are done setting up your EMA, your moving average, then you click on done. You can see done by the top right hand side of the screen. Then you click on done. Can you see it was not showing before, but you can see the line now showing. This is the line, the indicator line. Can you see this red line that is moving up? That is the indicator line. So that is exponential moving average 50. So we're going to set another moving average. You can see it is just one line you are seeing now. Aside the candlesticks, it is just one line you are seeing. That is the moving average. Then we are going to set another moving average, which is the moving average, exponential moving average 10. So remember, we'll click on this symbol here. That's this one. Yes, that F symbol, F-like symbol. You click on it. You have your moving average. You can now say if you want to add moving average now, add an indicator, you add it here. You click on this symbol here. That means you want, because we've set our first moving average. That is why it is now showing like this. It is not showing us all those moving averages again. It is showing us this one. So we click on this here to add more indicators. So if you click on that symbol, you can see it's now showing you all. Then you click on moving average because you still want to add another moving average. The setup has moving average 50, moving average 10, and moving average 200. So we've just set the first moving average, that's 50. Let's set up the 10. You click on moving average. You can see it is still showing moving average here. So you have to be sure it is moving average you are setting up. Then exponential, it is already showing us exponential because we put the previous moving average as exponential. What we are going to change now is our pixel here, our period rather. We're going to change the period to period 10. Now, period 10, from 50, we'll change it back to period 10. And also, for us to be able to differentiate which is which, we're going to change the color of the indicator from red, because the previous one we used was red in color. So we're going to change the color of this moving average 10 to another color. So let's use blue maybe for the period 50. Let's use blue. You see, you click on the symbol, the color symbol here. Once you click on it, to show you more colors. So you click on it. Let's use blue. Let's use blue, and then we can leave the period as the pixel as pixel 3. So click on the top right hand corner of the screen to select done. Once you click on done, can you see it is now showing? You have your blue line very close. The indicator of period 10 is very close, is much closer to the line as compared to period 50. You can see the blue one coming down. There is much closer to the line, and you see it is going this way. So that is that. I believe you can see it clearly. Can you see there's a blue line and there's also a red line? The blue one, remember, it is our exponential moving average 10, while the red line is our exponential moving average 50. So we're going to set up the third moving average. We click on our F symbol again. We click on the F and plus, that's this symbol. We click here to add more indicators, and then we add our moving average. Can you see moving average? You click on moving average, and then we change our period now to period 200, because that's the last setup. That's the last moving average setup, 200. Change to period 200. We'll still leave it as exponential, because what we want is exponential. Then we can change the color also, so that we'll be able to differentiate it also. Change it to, can use maybe let's use yellow or gold, yeah. And I would like to change the pixel to pixel 4 to make it thicker, since this is a bigger moving average. Change it to pixel 4. You can see I changed the pixel from 3 to 4, and then click on done. Click on done. Once you click on done, you can see it appears on the chart. Can you see it is way far? It's much farther from the moving average, from the other moving average. You can see the first moving average we put, that was 50. This is the 50, then this is the 10, and this is 200. Can you see? This is 10. The blue one is the 10 moving average, the red one is the 50 moving average we set, and the gold color is the 200 moving average we set. So let's set the other indicators that we have on the setup, and then after setting them up, I will explain to you the use of each indicator we have here. Now we still go back and click on this symbol. The next indicator we are setting is the stochastic oscillator. So we click on the F symbol, and then we'll click on our plus sign here. Click on it. Then we go down now to under oscillators. We're going to pick our stochastic oscillator. You can see stochastic oscillator here. Can you see it? Yes. So we click on stochastic oscillator. Now the setup for the stochastic oscillator is period 933, and you can see here we have 533. So we're going to change the first period to period 9. So we change this one here to period, the first period here, we change it to period 9. So let's see. We change it, you click on it and adjust it to period 9. And then it is a simple moving average, so we'll leave it as simple. We're not changing it to exponential. We'll leave this as simple. And then price field low to high, we'll leave it as low to high. We can leave the pixels at that point, but then we also have something showing here, which is the levels. If you observe down here, you see the levels 20 and 80. Yes, we are going to leave it as levels 20 and 80. You can set the levels to level 30 and 70, but we'll leave it as level 20 and 80 because that is the method we are going to be using for this indicator. Once you are done, you click on done at the top right hand corner of the screen. You click on done. Can you see the stochastic oscillator showing down here? The whole of this thing is the stochastic oscillator. So that is it. Remember, we still have our last indicator to add, and that is the RSI 14. So we come back here. Then we add our indicator. Now we click on this symbol here because we want it to appear together with the stochastic oscillator on the same place, down, not on the main chart now, but down where the stochastic oscillator appear. That's where we want the RSI 14 to appear. So we'll click on that place. Once you click on it, it's still under oscillators. We'll find our RSI, which is relative strength index. So we click on relative strength index. Under the relative strength index, we have period 14, exactly what we want. Can you see? Period 14, apply to close, it is okay. And then levels, but observe the levels here are 30 and 70. So let us edit it. We click on this pencil sign here to edit it. We want it to be 80 and 20. So we'll clean the first one to be 20. Then the second one, we clean it to be and edit it to be 80. Now, for the description, just to help you, since you are starting, for a description, the one on 20, you can change the description to be buy. You can put it as buy, maybe strong buy, a strong buy, or let's just leave it as buy. And then for the 80 level, you can put it as sell, just to help you remember that, okay, this is the levels you are working with. If you want to add more levels, you see this symbol here, you can add more levels with it here. But we don't really need more levels. We need just these two, the 80 and the 20. Those are the two levels we need. So once you are done, you click back and see it's still showing 20 and 80, and every other thing is set. We can leave it that way, but we can choose to change our color so that we don't have the same color with our oscillator, stochastic oscillator. So we can change the color of the RSI to probably let's use a dark shade of blue. Yes, let's use a dark shade of blue. Once you're done, you change it to done. You click on done. Once you click done, you can see it is showing not on the main chart, but you have your RSI showing here. So this is the RSI, this is the stochastic oscillator, and these are your other indicators here. So that is it about setting up your indicator. Now the strategy applied here is this. Once you get to the main chart, you see this is the end tip. This is the end tip. You can see the ends here. Now, how the strategy works is this. Once you have your RSI line touching this last line here, once you have your RSI line touching this last line here, that's the RSI comes sells to this place, it touches this place and it curves back up to go up, then you are to enter a buy trade. It shows the market has sold for too long and is about to start buying. So you enter your buy trade here. You enter your buy trade at this point. You enter a buy. If the market continues buying and gets to this point of 80 here and goes above it a little and then curves back to start selling, then you enter your sell trade at this point. You enter your sell trade. Once you enter your sell trade, that shows the market is, you want the market to sell. So that is the strategy. The same thing also applies to the stochastic oscillator. Once it sells, drops down to this point and gets a curve, you see a curve back that's going back up, you can enter your buy trade at this point. You can enter your buy trade and then it will buy. When it gets to 80, that shows the sellers are too much and exhausted in the market. So buyers want the buyers rather are exhausted in the market, so sellers want to come in. So once you have the market goes up and it curves down, you enter your sell trade here. This sell trade will go down and that's how you keep enjoying the market. Now that is all for the RSI and stochastic oscillator. That is the principle. So you can see, for instance, in this case, this will be a very good sell trade here. This will be a very good sell trade. This will be a good buy trade. So we can check it out and see. You can check it out. This point, can you see here? Can you see this point? Can you see this point here? This point, can you see where it is showing us? If we follow this line, it is showing us at this point here. Can you see it is showing us at this tip here? And if you observe, the market actually sold down to this place. So if you had followed your stochastic oscillator and took a sell trade from here, you would have been in profit because the market sold down to this point here at this point. So you can see that is how the stochastic oscillator works. And then let's do a little back test. How the moving averages work is this. In the moving averages, this is exactly what you would like to see. This kind of place here, this is what you like to see. Yes, using the moving averages, you like to see something like this. This place I cycled. Now what is there? Let's zoom it and see. Exactly. This is something you will really love to see here. You love to see a situation whereby the candlesticks, you love to see a situation whereby the candlesticks are forming below the 200 moving average. Yes, they are forming below the 200 moving average. Now, when they are forming below the 200 moving average, that is showing that this market is beginning to fall. That's a downtrend. The 200 moving average, remember, is the gold color. Is the one with the gold color. So if the candles begin to form below it, it means the buyers are exhausted in this market and the market is looking forward to sell. And once you see it that way, and then you now see a cross, we call it a crossover, we call it a golden crossover. A crossover where you see the blue line, for instance, the blue line, remember, is our 10 moving average, crosses the 200 moving average, and at the same time, your red line, which is your 50 moving average, also crosses the moving average. But remember, the 50 and the 10 moving averages have already crossed here. Can you see they've already crossed here? And then the 10 moving average came and crossed around here. And then the 200 moving average, the 10 and 50 moving averages crossed here, that first place. Then the 210 moving averages crossed here. Then you have your 50 and 200 moving average crossed here. So these are golden crossover points. You can enter this trade after you see a crossover from the 50 and 10 at this point, and then when the 10 goes forward to cross the 200, you can enter your sell trade. Once you enter your sell trade, if you are a conservative trader, you want to wait, you can wait for the 50 moving average to cross the 200, which was at this point. Then you take your sell trade here. That means you take your sell trade. At this point, you might have a little reversal, but you see the market went on selling. Market went on selling. Can you see? Can you see it sold from this point here where there was a cross? It sold from this point. This was where we had a cross on the 50. So you see all this place down, the market was selling. If you had entered this market, you would have been in a lot of profits. Lots. Wow, wow, wow. You can see it kept on selling even up to this point. Your market was still selling. It sold down to this point here. So where you are supposed to exit a trade like this using this crossover strategy is when you now see your market, you have a crossover again. You see at this point there's another crossover between the 10 and 50 moving average. This is already giving you a sign that it is time to leave. 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 Now, at this point, once you have this crossover, it is a good sign that you should start getting ready to leave the market. And then what this means also, you can see the strength of buyers. You have plenty strong buy candles coming up. So it is time to exit this market. And you can see them, they got to the 200 moving average. There was a bounce, and then you see a strong sign of a candlestick pattern, which you get to learn in subsequent videos what candlestick patterns are. So at this point, you see there was a bounce. Someone, a professional trader, can actually take this trade here to this point and stop. But then for you, you follow your strategy, which is you exit your own trade, which you've been holding for some time. You exit it here. So that is it. You can see there's another touch on the 200 moving average here. There's another touch from the candlesticks here. They touch the 200 moving average and then they bounce back. So that is what you'll be looking for your signals. Look at this point here. You have a crossover here between the 50 and 200 moving average. Once you have your crossover, you can take your trade somewhere around here, your buy trade. You can see the 50 moving average cross from below going up. It crossed the 10 moving average from below going up. So you can take your buy trade from that point, and you can see there are actually a lot of buyers coming into this market, so you can take a buy trade from that place. And then you can observe at this point that the market is now forming above the 200 moving average. Look at this point, the market came, bounced on the 200 moving average, and it is keep going, and it has been going up. So this will be a very good buy market at this point in time. So that is it about setting up your indicator and how the indicator works, the principles of how the indicator works. Remember, the same thing applies with your RSI. Once the RSI gets to 80, curves down, it is a time to sell. Once the RSI gets to 20 and curves back up, it is a time to buy. So that is how it works. The same thing with the stochastic oscillator. So you can work with either the moving average, or you work with the stochastic oscillator, or you work with your RSI. So that is it about this chart, about this setting up your indicator. So in the next video, I'll show you how to execute a trade. I'll show you how to execute a trade, how you execute a trade.